Despite the rest of the market bleeding over the last week or so, we have LUNC going on an absolute tear, up 105% for the week. It's now up a 6x from its lows just a month ago. It's been absolutely ripping ahead of this announcement that their new governance proposal is going to introduce a burning and staking mechanism as part of the revamped tokenomics, as part of this revival plan for Luna Classic. So the question in today's video is, will it continue this crazy pump? Is this simply just a little pump and dump into some mania hype, or can this actually be sustained once the burn is introduced? I'm going to be running you through all the data that you need to know in today's show. Let's get straight into it. So LUNC is gaining serious momentum that is very, very clear by both the charts and its relative strength versus the rest of the market ahead of this new major upgrade, which introduces a 1.2% burn tax to all swaps. So basically, every single swap that is executed either on-chain or on an exchange will be subject to a 1.2% additional burn tax above the exchange trading fees. So this burn tax is basically set to reduce the amount of total supply of LUNC in the market, which is now 7 trillion tokens, many, many, many more tokens than the LUNC token originally launched with when it was initially called Luna. So now the question becomes, could this mark the beginning of a sensational revival for Terra Classic? That's what we're going to be talking about in today's show. Just so everyone is on the same page here, LUNC is the original token of the Terra ecosystem. So when the UST collapse happened, after the collapse, they rebranded the Luna token to represent the new chain, which Do Kwon is helping run. And the old Luna token was rebranded as LUNC, or LUNC, which represents the old chain, the original chain with its original governance and original code. Now, LUNC is the topic of today's video. So that is referencing the old Terra chain, just to make sure that there's no confusion about LUNC and Luna, which is now representing the new chain. So Luna Classic is now what the old Terra chain is called, and it's essentially using and utilizing the code of the original Terra ecosystem. So Do Kwon went off and set up a new team to start the new Terra endeavor, which is focusing on the new chain with obviously a whole set of new dApps, whereas this LUNC token, or Luna Classic, focuses on the old code, but that means it's governance and community run. So community now has access to vote on proposals and vote on governance chain proposals going forward. So essentially what that means is that this is now a community run project, and this is part of the reason why it's been so successful over the last couple of weeks, because it really has that strong sense of community, that almost like meme coin like qualities, which have meant that it's had such a tight knit community, and it's been number 2 on Luna Crush for the past couple of days. So it's very clear that social dominance is starting to tick up, both on Twitter. If you've been scrolling through Twitter recently, look, even in the corner here, LUNC literally trending in the corner of my screen as we talk about it. So it's very clear that there is a lot of hype behind this right now. And I think what we need to do just before we get into the new token burn mechanism and run through some pricing models as to how that could affect the Luna price, we have to understand why the burn is needed, because the truth is this burn is fixing a fundamental flaw in the Terra ecosystem, which is one of the things that is kneecapping this ecosystem from doing anything. Basically, until they fix their tokenomics issue, which this proposal helps do, I don't think the chain can perform anywhere near like other L1s can perform, because of a key problem that the chain has, and that is oversaturation of tokens. There's simply too many tokens on the chain, which makes it unusable. Now, what essentially happened back when Luna collapsed was it was a reflexive mechanism. So we knew that tokens were burnt as UST was minted, whereas the other reflexive mechanism kicked into action once the death spiral began, and more tokens were minted to try and defend the UST peg. But this defense wasn't successful. We all know that by now, with the Luna price crashing from $80 on the day down to a low of 0.000004, so essentially $0, which was a death spiral mechanic, which meant that LUNC tokens were being printed and printed and printed to try and defend the peg, and as more were printed, the price went down, and it ended up hurting itself, because in the end, you ended up with 7 trillion worthless tokens instead of 100 billion tokens that were worth something on the market. So that essentially put a huge strain on A, the price, and 2, the usability of the network, because when you have 7 trillion trillion tokens, each trading at a fraction of a cent. That then becomes very difficult for developers to deploy dApps on the chain. And it also becomes difficult for users to use the chain because there's simply too many tokens on the chain. And that is a major issue. There's such thing as token scarcity, like we see in Bitcoin. That creates its own inefficiencies in some ways because you need Satoshis or sats in order to trade smaller denominations. Whereas this has the effective opposite problem of say, a Bitcoin where there's too many tokens. And there's no way to actually fix this problem unless you burn these tokens. So that is what the community identified as being the primary issue kneecapping Luna. And they said, okay, we need to fix this. And the way that they decided to fix this is through this new governance proposal, which is version Terra Classic 1.2, introducing a new mechanism which burns Luna Classic tokens via additional swap fees. So 1.2% of all transactions involving Luna C will now be burnt on top of the existing exchange fees. So the way this will work, and the only real way that this can succeed, is if exchanges, so big exchanges like Binance, KuCoin, etc., actually support this burn. Because if Binance says, no, we're not supporting the burn, you can trade Luna tokens for all you want, but we're not going to burn tokens, that essentially renders it useless because over 40% of the trading volume on exchanges is on Binance, and over 55% is KuCoin, Binance, and Gate. So you need these big exchanges to come on board. We know the governance proposal will affect on-chain swaps. So anytime you're swapping on a Terra DEX, this burn mechanism will apply. But Binance, KuCoin, and these other main exchanges need to support the burn in order for this to work, essentially. Now, KuCoin came out and said that it will support this network upgrade, so that is a positive sign. Binance has been heavily rumored to be supporting the upgrade. I actually did look through if there was an official announcement from Binance. There's not yet, but I went through the Discord servers, and quite a few people in the know are saying that they are supporting it and they will be supporting the upgrade. So there's a little bit of speculation, in all honesty, on the Binance side of things. But if they do support the burn, and to be honest, it makes sense for both of them to support the burn just because they essentially can get a lot more liquidity onto their platform as more people trade this token. They make more money off swap fees. It's essentially a no-brainer. So I do think that the major exchanges will support this. So although that could be a potential headwind, I don't classify it as a significant threat because I anticipate both of those exchanges actually accepting the burn. So this feature goes live on the 12th of September. There's been a few misguided comments flying around social media lately that the burn is already live. No, staking is already live. So you can stake your tokens for 38% right now, but this burn mechanism that we're talking about with this 1.2% burn tax won't be live until around the 12th of September. Right now, we're still in the proposal stage. Once the proposal gets ticked off, then they can implement this in about 2 weeks. So this is why we're seeing a run up in the token price, because people are speculating on this update going live in a couple weeks. But how will this affect LUNC's supply once this actually goes live? Well, this is essentially a chart which outlines the Luna Classic burn and the Luna Classic gains. So yesterday's trading volume, for all intents and purposes, was $1 billion. So it traded $1 billion of trading volume over the last 24 hours. If that trading volume hypothetically continued once the burn mechanism was introduced, then that would equal an equivalent, based on the 1.2% burn tax, 120 billion tokens burnt. So if $1 billion in trading volume happened every single day, that would be 120 out of the 7 trillion tokens burnt. If you apply this to a monthly chart, so if you times the 120 by 30, that's 3.6 trillion tokens. Currently, the total supply of Luna Classic is 7 trillion. So judging by yesterday's trading volume, if we assume the absolute case that this continues once the burn is introduced, then basically half the entire supply of Luna Classic would be burnt in just a month. Half the supply would be burnt in a month. And in 2 months, the total supply would be burnt, assuming yesterday's volume continues. Now, that sounds very bullish. It got people very excited, and $1 LUNC was even trending because a lot of people are saying that there's a genuine chance of LUNC hitting $1. Well, there's a couple major caveats that you guys need to know, because obviously in real market conditions, this 3.6 trillion token burn in 30 days is essentially unachievable because A, this chart assumes that the Luna C price is constant. So as the price of Luna increases, the law of diminishing returns will kick in. So it basically becomes unachievable to keep up the current pace of the burn when the LUNC price is increasing or decreasing for that matter. It has the same effect both ways. 2, it's very unlikely that trading volume sustains this pace once the hype dies down. We know how much hype this token has behind it right now. Building hype is quite easy in crypto. Basically, the formula for a big hype event is have an announcement, have some fancy terminology, get some big influencers to cover it, hope it takes off, and essentially you can build a lot of hype very quickly. Here's the problem though. Sustaining hype is difficult. Building hype is easy. Sustaining it is very difficult. So I think the major issue with the assumption that with this burn chart is that it is implying that the current hype will sustain, which will equal an equivalent $1 billion in daily trading volume. Now, this isn't necessarily the case. We can look through this chart and we can pick a lesser number. We can pick 200 million, we can pick 500 million, and we can plot our assumptions on the burn tax based on these lower figures. In fact, I think that is more likely. So I think if we're being more realistic, we should be looking at closer to a 12 to 24 billion token burn a day. And that is still pretty aggressive in my opinion. You can even take the base $50 million case here of 6 billion a day. That's still 181 billion out of the 7 trillion. That's 2% of the total supply every month being burnt. Even if we take the base case, that's still quite a lot, to be perfectly honest with you guys. So look, although it's unlikely that Luna hits this famed $1 price target, because that's a 3,436x from here, meaning if you put in $1,000, you'd have $3.4 million, assuming current prices, which is crazy. And that basically is the narrative that a lot of people are pushing for. It still is likely that there is runway here, in my opinion. Even though $1 is basically impossible, in my opinion, it's still very likely that there can be a continued run up here. So I think this is the one thing this price target has going for it, though. So even though I don't think it's hitting $1, the one kind of hope for investors is that the fact Luna previously traded at astronomical prices, the fact that it previously traded at $100, $1, $5, $10, $20, gives it scope for growth in the eyes of retail, because there are a lot of retail participants that are simply going to do this. They're going to go into CoinGecko, they're going to search up LUNC, they're going to look at the price chart, they're going to see that it used to be $100. They don't know anything about tokenomics, because 99% of crypto investors don't know anything about tokenomics, and they're going to see, wow, it used to be $100. Oh my god, you can get it at $0.2. Oh, I got to buy it. It's got to go back to $1. It only needs to go back to $1 out of 120 for it to pump 3,000x and me to be a millionaire. That's what a lot of people are thinking, right? So even though I don't think that's realistic at all, because the sell pressure anywhere close to $1 would be so crazy. Sorry, as people take in massive profits. Like if I put in $1,000 into this and I make $3 million, like I'd be almost stupid to hold, and anyone would be stupid to hold. In fact, I'd probably cash out most at 100 grand or even less. So the sell pressure will be absolutely crazy, close to $1. But at the same time, the meme coin like qualities that it does possess at the moment do give it a little bit of scope to maybe push higher, in my opinion. And that's kind of how I'm viewing Luna right now. Now, LUNC fans in the comments are probably not going to agree with this, but I kind of view LUNC as a meme coin right now, because it's got this cult-like following. It's trending on Twitter. Just Matic's now trending. Wow, of course. An actual project's trending. Oh, what a shame. It's been number 2, number 1 on Luna Crush over the last couple of days. The tech is questionable. Like, why would a developer build on LUNC over Cosmos? So it's got a few question marks, but you can't fade the power of community and meme culture. At the end of the day, that's something that we can't really discount in crypto. So I think the burn mechanism, guys, this new upgrade that's happening in 2 weeks, this is the first step. This is the first of many steps, right? Until Luna fixes this tokenomics problem, the network will forever be plagued. And as long as the network is plagued, it's inconceivable that a developer would choose to develop on Luna Classic over Cosmos, Matic, Solana, or any other EVM-compatible chain. It just does not make sense. So this is the first step to A, regaining some trust, and B, fixing the biggest fundamental flaw on the network, and that is token oversaturation. Fix this issue, and maybe, just maybe, Luna actually has a fighting chance. Now, I do also think there are some developers that will deploy dApps as opportunistic development. Meaning, similarly to what we saw on Doge Chain, there'll be many developers that see this as an opportunity to come in and accrue quick users, quick cash, offer high APRs, etc. And this could essentially result in a Dogecoin-like meme coin frenzy mania run-up like we saw with Doge Chain last week. So I do potentially see some dApps deploying, and probably some decent dApps deploying, in order to attract some of this loyal community that LUNC is now building. It's almost like this cult-like following. I feel like it's built up of a lot of ex-Luna fans that lost money on Luna and want a shot at revival here. So I totally get the narrative. There may be developers that try and be a little opportunistic here and take advantage of that. However, projects with like a multi-year time horizon may not do that. So yeah, the token ranks are absolutely crazy right now. It was like rank 50 today, but I think it was rank 2 even earlier in the day. In fact, if we refresh here, we can probably see it still in the top 100. Yeah, it's still ranking quite highly. Wow, I'm ranked 5. I'm the number 5 Luna influencer right now, which is weird because I just did one tweet. But yeah, rank 53, Galaxy score 48 out of 2,000 projects. And we can also see a bunch of nodes are now popping up. Interestingly, the staking rewards are 38%. So if you do stake your Luna, you can make 38%, but 6.84% of the total supply is currently staked. That's quite a large percentage considering staking only went live 4 days ago. So the staking went live before the burn as part of kind of like their fragmented rollout plan. So they're going to be rolling out a bunch of upgrades over time to get this network, or to try and make this network usable again. Now, there's 2 very cool things I haven't shared with you yet that I want to share with you. One is a play off the back of LUNC that I think still hasn't run as much as it could. And 2, I'm going to actually make a trade here live on the show, just because why not? So the first thing is this burn tax doesn't just apply to LUNC, it also applies to USTC. So USTC, which is obviously the old UST token that people used to stake on Anchor Protocol, this is now basically 0, right? There are theories flying around the Terra community that after this LUNC burn focus is eradicated, they are going to now start focusing on the USTC component, which would essentially try and make a stablecoin that gets back to peg. Now, whether USTC is the stablecoin that they try and get back to peg, or whether they make a new stablecoin and you can redeem it, that's a question that I still can't answer because the proposal isn't out yet. But there is a chance that this performs well. The original UST performs well. Now, I don't think it'll ever be a usable stablecoin again, but that's not what we're trading here. We're trading on people speculating on it recouping a percentage of its original value. Now, this basically could mean a 10x. Like, this is the kind of trade we're making here. We're not buying this thinking it's getting back to $1. We're buying this hoping that it continues to make a little bit of profits, and then we cash out, just to be completely transparent with everyone here. But this still has some ways to go in terms of how high it could run. It hasn't run quite as high as LUNC yet. It is roughly up 0.02. So it's only up like 60-70%, whereas LUNC is up a lot more than that. It's up multiple X's. So if they do introduce more initiatives to try and get this back to peg, this could be an interesting play as well. So a lot of you now are going to ask me, like, should we be buying LUNC? Here is my answer to that question, and I am also going to make a trade live on the show right now, and that is that this is extremely risky. This is likely a pump and dump. I don't see this sustaining long term, and I don't see it hitting $1. However, there is a potential here that this narrative continues to take off. And because there is potential that it takes off, I am going to be putting in gambling money here. So I said this on yesterday's show, money that you would be willing to literally walk into the casino, slap it down on the roulette table, and take a punt on red or black. That is the dollar amount that you should hypothetically be betting on LUNC, in my opinion. For me, that's $1,000. I would do that at the casino. I've done it before. So I'm putting in $1,000, and I'll do it right now. Let's just get this up. I'm actually using BYBIT, by the way. If you do want to trade on BYBIT, there's a link in the description. We also have a $4,200 sign-up bonus if you sign up and deposit. So if you're going to trade, sign up on BYBIT. They do have the LUNC token. I'm not saying you should necessarily buy it. This is completely up to you. I'm being a degen here and I'm going to buy some. But if you do want to trade any token, not just LUNC, then you can claim that deposit bonus using the link in the description. It also helps support the channel. So I'm just going to put in $1,000 here of Luna Classic, buy LUNC. This is spot. So this isn't leverage. This is actually just spot. So here's my plan. And maybe I'm stupid for doing this. As I said, I'm literally going to the casino now. If I lost $1,000 on the roulette table, would I be annoyed? Slightly, but not really. It wouldn't affect me. I'd be fine the next morning. So that's basically how I'm viewing this trade here. If I lose it, I lose it. But it does have that potential to 10x. And that's kind of why I'm making the trade here. Because if I can make something, then I may as well have a little bit of exposure. Because before this video, I had no exposure. So anyone saying I'm pumping my own bags, wrong. I literally bought live. So I literally bought live with you guys. So I didn't front run the show or anything. And we never do that, by the way. We have an ethics code that states we can't trade tokens 24 hours. So I can't dump on you 24 hours after the show. And I much prefer buying live on the show than front running my audience, frankly. So anyone saying I'm pump and dumping, completely false. You just saw me do it live. So the next level I'd be looking at, if the price does come down a bit, and I can't edit this chart because I'm on view only mode, but I'll draw it in for you here. It's this 0.00024 range. This horizontal range was the first major peak. That is the next accumulation zone that I see as being fairly decent for LUNC. Then the next one would actually be this this previous wicket at the roughly 0.0002 mark. So I'm just going to say 0.2 to make it easier because there's so many zeros. And then my next level, so my third buy zone, is this key critical intersection here after this initial rally. So if this ends up just being a pump and dump and it comes back to horizontal support, I see that support as around the 0.16 region, and that would be the next region where I ape in. So that would mean 3 buys for me. That would mean $1,000 3 times. So that would mean my total willingness to risk on this token would be $3,000. The reason I bought some just then was because I wanted initial exposure because I didn't have any, and I view longing something as getting a hedge in if you don't already have a position. So if it goes down, I'm not fussed because I'll probably just DCI a little bit more. But since I don't have an initial entry, it'd be stupid for me not to hedge with an initial position. And then if it goes back down, I'll keep buying. But this is just degen stuff. I just thought it'd be fun for me to buy it on the show live. But yeah, I'm also quite Angry Bear, I don't dump on viewers. I've never dumped on viewers. I never will dump on viewers. The channel made one mistake, which we were very transparent about back last year before we had the ethics code. Since we introduced that code almost 10 months ago, we have not, we've never even done that. Never. And we never, ever do it. So people that say shit like this, it's very, very misguided. And yeah, cool. Well, if you guys are joining this trade as well, let me know in the description. I'm not saying you should. Remember the roulette table analogy. So in a couple months, if this is $0, just we'll come back to this video and I'll say, okay, we're at the casino. Just remember, this is the roulette table. But if you feel like we're going to hit red today, then maybe take a little bit of a play. But the fundamental analysis doesn't change that. Look, there is a chance that we do see some serious price impact from the burn. So yeah, anyway, let me know in the comments what you guys are doing. Interested to hear your thoughts. Yeah, let's actually go live on Instagram right now, because this is my last show of the week. So I want to do a big Instagram stream. So I'm going to go live. I've literally got my phone up. Start a live stream on Insta so you guys can ask me any questions. And yeah, cool. Going live on Instagram. So link in the description to my Instagram if you want to hang out live with me right now. And I also follow some people back, loyal followers that follow me. I also follow a few of you back so I can interact with you guys. All right, cool. I'll see you in the next one. Peace.